So now what are we to calculate in this case? Current ratio for both companies. So what is the current ratio for 2021 and 2020 for each of these companies? So for Corner Cookers, what would it be? क्या होगा? 46448 divided by current liabilities 69036. So that means the current ratio is much below 2. So what does it mean? That means Corner Cookers ideally doesn't have a very sound liquidity position. What about the other guy? What about 2020? 2020 will be 249,664 divided by 4644. No, sorry. Divided by 74457. Now this is strange. What does this tell you? It tells you that your current ratio has declined from 3.35 to 0.67. What does it tell you? That there is a deterioration in liquidity, which is nothing but short-term solvency position of this guy. What's his name? Corner Cookers, CC. होता है, generally नहीं होता है, but same way for you can compute for Olsen Owens on your own. I'm just doing one of the companies. Next क्या बोला आपको करने के लिए? Quick ratio. So quick ratio को देखने के दो तरीके हैं. Quick ratio, there are two ways to look at it. Please pay attention. Now, what all are there in current assets? Current assets mean you have cash, you have short-term investments, you have accounts receivable, which is also called sundry debtors, you have prepaid expenses, right? What else do you have? You have inventory, right? ये सब कुछ आता है and this total will be your current assets. तो या तो आप इसको ऐसे कर लो क्विक रेशियो के लिए, either you can do total current assets minus inventory minus prepaid divided by current liability. This is one way of looking at it. The other way of looking at it, which your books tell you, is it will be cash plus short-term inventory plus AR, not short-term inventory, short-term investments, plus AR by current liability. बात तो एक ही है. So you look at it this way or that way, the answer is going to be the same because they all add up to current. Take maybe we are taking a bottoms up approach. In the other case, we are taking a top down approach. Both are same. Better, easier to calculate. Correct. So आपको क्या करना है यहाँ पे क्विक रेशियो के लिए? So this was current ratio. क्विक रेशियो के लिए क्या करना पड़ेगा? For 2020, current assets 249,664 minus what are the inventory 13962 minus any prepaid is there? No prepaid. So बस इतना ही minus करना है. Divided by current liabilities. Current liabilities कितना है? 74457. Which is 3.17. And अभी कितना है? 46448 minus inventory 13921 divided by current liability 69036. So it has come down to 0.47. अब देखो ये वाले जो numbers हैं, both current ratio and current quick ratio, both of them are saying that there is a decrease in the short term solvency. ये दोनों numbers are good numbers. This is both these numbers are greater than 2. Remember I told you that for benchmark current ratio is what? Is 2. इसमें benchmark current ratio से ज्यादा है, लेकिन इस केस में benchmark current ratio से कम है. So there is a rapid deterioration because quick ratio should be higher than 1. Current ratio should be higher than 2. तो दोनों ही बहुत बढ़िया था in 2020 and dono are below par in 2021, which means that for corner cookers, the liquidity position has severely declined. Next क्या है? What is the next? Inventory turnover ratio. So inventory turnover ratio के लिए क्या है? Cost of goods sold divided by average इन्वेंट्री. तो इन्वेंट्री टर्नओवर रेशियो क्या होगा यहाँ पे देखो. व्हाट इज कॉस्ट ऑफ गुड्स सोल्ड बाय एवरेज इन्वेंट्री? कॉस्ट ऑफ गुड्स सोल्ड फॉर करंट ईयर इज 80153. 80153 divided by average inventory. Average inventory will be 13921 plus 13962. The whole thing divide by 2. BODMAS please मत भूलना और outer brackets भी लगाना. So your inventory turnover ratio is 5.75. This is ITO. तो अगर आपका inventory turnover ratio 5.75 है, इसका मतलब क्या है? What does this mean? The inventory is converted 5 times in a year. From raw materials to inventory conversion. तो आपका inventory holding period कितना हुआ फिर? Correct. 365 divided by inventory turnover ratio. So that means on an average you are taking 63.5 days to convert your inventory. On an average you are taking 63.5 days to convert your inventory. This is your inventory holding period. Clear? Next क्या पूछा है आपको वसुंधरा? Next. Receivable turnover ratio. Receivable turnover ratio में sales by average debtors. So sales क्या है? 207349 divided by average AR. Average AR is 8216 plus 186766 divided by 2, which is 2.13. Average opening plus how many times you are selling on credit and getting the cash back. So then what will be your receivables credit period? 171.62 days. मतलब what does it mean? 172 दिन लगते हैं for the customers to pay you money. 172 days. That's probably one of the reasons why your credit ratio has come down. Clear? So that's how you compute your inventory turnover ratio and debtors turnover ratio. और कुछ है इसमें पूछा है? Anything else? That's it. So you understood what is each of these ratios mean. So let's move to the next question now. So what are the so in this question, what are the solvency ratios required? Debt to. So debt to assets के लिए you can take ideally you should take long-term debt by assets. What is your long-term debt? So then you take the total 14 lakhs. So your debt to assets ratio will be equal to 14 by 53, which is 26.42%, right? debt to assets ratio. What is debt equity ratio? Debt by equity. So which will be 14 by 39. Now इस case में always express it in decimals. नहीं तो फिर आप टोटल ले सकते हो, अदरवाइज लॉन्ग टर्म डेट लेना चाहिए. सो डेट टू इक्विटी रेशियो कितना आया? 0.36. हाँ, so but debt to equity ratio always express in decimals, never percentage. So can you tell me, is it a good debt to equity ratio or a bad debt to equity ratio? It's not good. You should have a debt equity ratio of around 2. Do you know why? Because debt होने से financial leverage होती है, and financial leverage magnifies your returns for the shareholders. So it's better to have debt in your capital structure. I have a separate video for this around leverage, वो भी मैं आपको भेजूंगा, आप देखना. उसमें आपको क्लियर न्यू नंबर्स के साथ प्रूव है कि क्यों डेट होने से हमारा जो रिटर्न ऑन इक्विटी है या ईपीएस है वो मैग्नीफाई होता है. इट्स बिकॉज ऑफ फाइनेंशियल लीवरेज, बिकॉज डेट इज अ चीपर सोर्स ऑफ फाइनेंस. उसमें टैक्स डिडक्टिबिलिटी है. इंटरेस्ट जो है, जितना ज्यादा इंटरेस्ट होगा उतना प्रॉफिट कम, उतना टैक्स कम. So that's called as a tax shield of interest. So the cost of debt comes down. So if you have more cost, more debt, the cheaper source of finance increases, and that magnifies the returns for the shareholders. That is called as financial leverage. So you should ideally have, generally, debt equity ratio ka recommended standard is 2:1. So 2:1 is considered optimal debt equity ratio. So इसमें there is sufficient scope. यहाँ पे debt equity ratio is 0.36. That means this company that we are talking about here, Oshie Blabjacks, is having sufficient capacity to raise more debt. और क्या पूछा आपको यहाँ पे? Times interest earned is nothing but ICR, interest coverage ratio. वो कितना होगा? EBIT by I. So that is 8,50,000 by 1 lakh, which is 8.5. So this is brilliant. 8.5 interest coverage ratio, बहुत अच्छा है. So if this company has a good repayment record, past record of repayment is good, and if the company wants to borrow more, जो कि ये कर सकता है because इसका debt equity ratio भी कम है. So if it wants to go and borrow more, bank will have no hesitation in disbursing the loan to them because their interest is covered 8.5 times by operating profit. समझ में आ रहा है आपको context? So that is interest coverage ratio. Better up to 3 also, no issue. Manufacturing industries में 3 तक भी अच्छा है. That's okay. So it's good up to a certain extent, not 100% debt, but up to a certain optimal extent, it's good to use debt. आपको बोल तो रहा हूँ, आपको leverage वाला वीडियो देखोगे आपको समझ में. वो debt free होती है वो companies जो already they have made their credibility in the product cycle. Like there are companies which have, because they have in the past raised so much debt that has actually increased the cost of equity drastically because the shareholders became insecure. तो वो counter productive हो गया. That's why you should not raise too much debt also. So इसीलिए debt equity ratio 2:1 is considered healthy. अभी देखो next question क्या पूछा आपसे? Next interest coverage ratio के बाद discuss the solvency of Flowshack. अच्छा अब देखो यहाँ पे ही मैं आपको क्यों मैं बताता हूं कि क्यों डेट रेस करने का कैपेसिटी है. सपोज एक कंपनी 50% कैपेसिटी पे काम कर रही है. आर्यन प्लीज पे अटेंशन इधर. सपोज अ कंपनी इज वर्किंग ऑन 50% कैपेसिटी. लेट्स से द रेवेन्यूज ऑफ दिस कंपनी इज 100 crores. सिंपल एग्जांपल. माइनस उसका जो कॉग्स है, कॉस्ट ऑफ गुड्स सोल्ड, दैट इज 40. ठीक है, तो आपका ये कितना है? व्हाट इज योर ग्रॉस प्रॉफिट? Gross profit is 60, which is 100 minus 40. Now I can call this for better reasons, this is also called as contribution margin. If you take the cost of goods sold as variable cost, this is also called as contribution margin. अब contribution margin में से अगर मैं अपने fixed cost को minus करता हूँ, which is generally operating expenses. So let's say my fixed cost is 20. So that means my EBIT is 60 minus 20, which is 40. Now let's say the interest cost. Suppose this company has 100 crores of loans which carry 10% interest. So 100 के ऊपर 10% कितना होता है? 10 crore. So your interest cost becomes what? 10 CR. Clear? So what is your PBT? Profit before tax 40 minus 10, which is 30. Clear? अब ये जो दो मैं इन दोनों को हाईलाइट कर रहा हूं, ये दोनों मेरा फिक्स कॉस्ट प्लेटफॉर्म है. फिक्स कॉस्ट प्लेटफॉर्म. व्हाट डज फिक्स कॉस्ट प्लेटफॉर्म मीन? फिक्स कॉस्ट प्लेटफॉर्म मीन्स अब अगर मैं और ज्यादा मेहनत करूं, थिंक फ्रॉम अ फर्म्स पर्सपेक्टिव. प्लीज एवरीवन पे अटेंशन ऑन द स्क्रीन. Suppose I look at it from a firm's perspective. If a firm can produce more and sell, more, then there is more chance to get more earnings for shareholders. क्यों? क्योंकि फिक्स कॉस्ट तो आपके बढ़ने नहीं वाले. फिक्स कॉस्ट, आप चाहे आप 1 लाख टन स्टील प्रोड्यूस करो या 1 टन स्टील प्रोड्यूस करो, आपका लैंडलॉर्ड आपसे रेंट उतना ही लेगा. So fixed costs are never going to increase, but your earnings can magnify because fixed cost वही रहेगा. Cost per unit will start falling down. You will start to enjoy what is called as the economies of scale, and that is nothing but operating leverage. The same concept can be extended to financial leverage also. तो हमारा ऑपरेटिंग लीवरेज कितना है इस केस में? डिग्री ऑफ ऑपरेटिंग लीवरेज, इट विल बी वैल्यू बिफोर द फिक्स कॉस्ट ड्राइवर बाय वैल्यू आफ्टर द फिक्स कॉस्ट ड्राइवर. बहुत सारे टेक्स्ट बुक्स में it will be mentioned as contribution by EBIT, which is 1.5 times. Do you know what this 1.5 times means? That means ideally 100% increase in sales will bring 150% increase in EBIT. 1.5 का मतलब क्या है? 100% increase in sales will bring 150% increase in EBIT. So let's see. So now suppose मैं यही this firm itself, this firm now moves to 100% capacity. 100% capacity होगा तो रेवेन्यू कितना हो जाएगा? 200. What about the variable costs? Obviously वो भी डबल हो जाएंगे because that is going to commensurately increase with production. Contribution margin will also double, but will your fixed cost change? Your fixed cost will not change. It will remain at 20. What will happen to your EBIT? It will jump from 40 to 100. Can you tell me 40 to 100 के jump में how much is the percentage change in EBIT? 150% change in EBIT. That is because your degree of operating leverage is 1.5. So 100% increase in sales has got you 150% increase in EBIT. Why? Because your fixed cost platform was the same. That is called as operating leverage. Now, what is financial leverage? Financial leverage में आपके obviously till the time you breach 100% capacity, you are not going to borrow additional. So your interest cost is going to remain the same, right? So अब देखते हैं कि यहाँ पे अगर मेरा interest cost same रहेगा, which is 10, what will happen to my percentage increase in PBT? Can you calculate मेरा percentage increase in PBT क्या है? नहीं, before that, what will be the degree of financial leverage here? EBIT by PBT. Very good. Which is how much? EBIT divided by PBT, which is how much? 1.33, which means 100% increase in EBIT should cause 133% increase in PBT. Clear? Very good. तो अगर मैं यहाँ पे देखूं कि मेरा परसेंटेज चेंज इन पीबीटी कितना है, 90 माइनस 30 इज 60, 60 बाई 30 इज 200%। बट अभी तो हमने कुछ और डिस्कस किया था। हमने डिस्कस किया था कि 100% इंक्रीज इन एबिट इज कॉजिंग 133% इंक्रीज इन पीबीटी। बट हमारा एबिट 100% से इंक्रीज नहीं हुआ है, हमारा एबिट 150% से इंक्रीज हुआ है। So 150% increase in EBIT should cause 150% into 1.33, which is 200% increase in PBT. That is called as financial leverage. Can you see what impact debt has on your capital structure? उसको और भी एक तरीका है समझाने का, ये देखो आप। अब सपोज मेरे टैक्सेस यहाँ पे 40% है, सो 30 के ऊपर 40% क्या होता है, 12। So what is your PAT? PAT is 30 minus 12, which is 80. What is the taxes and PAT here at 40% rate? 36 and 50. अब सपोज हमारा जो कैपिटल स्ट्रक्चर था, हमारा कैपिटल स्ट्रक्चर था इक्विटी में 400 और अदर 200 लेट्स से, एंड डेट में 100 हमने दिया था ना, 100. So equity and debt is, or rather let's take it different, let's keep it 50 and 100. Equity was 50 and debt was 100. So total capital employed was 50 plus 100, which is 150. अब सपोज यहां पे अगर आप देखोगे तो हमारा जो ROE है, रिटर्न ऑन इक्विटी, कितना है, पैट डिवाइडेड बाय इक्विटी, कितना परसेंट है, 36% है। और यहां पे कितना है ROE, 54 by 50, which is 108%, 3 गुना। Because of debt in your capital structure, your ROE and EPS has also multiplied by 3 times. So this concept is called financial leverage. And if you remove debt from your capital structure, your equity value will increase and your ROE will fall down. Is it okay? So that's the concept of. Okay, that brings us to the end of this session. Thank you. Now I will